with our PowerPoint. So again, welcome everyone to the How to Create a Financial Plan for Your Business. We are very pleased to be able to share what some consider might be not so exciting, the not so glamorous part of business development, but it's absolutely critical if we are going to have strong and successful entities. Again, the CREATE campaign, we are a minority business development nonprofit. We offer entrepreneurship trainings, workshops, microloan funds, support, and mentoring. Our session objective today with Letitia, who's joining us again, is going to be learning ways to organize our business financials. And how Letitia has approached this presentation is to give us the understanding of what reports are needed to be able to begin creating that financial plan, and really just making us aware of how to organize that information based on these financial reports, which are required and expected in many cases if you are looking to present your plan to funders, partners, lenders, things of that nature. So why I'm going to just give a brief overview about why a financial plan is important in the first place. It definitely provides guidance to the owner, and it helps to determine the strategies to grow a business. It is definitely a different thing getting into business, launching it because you have a skill, a passion, a desire, and making decisions based on your excitement and your enthusiasm, compared to looking at what your financials say about your business, about how to position, how to be able to invest, how to be able to move and grow and market and things of that nature. So we need to be able to look at growing and strengthening our business based on what our numbers say as well. Financial plans, they do help to determine the cost of goods and services. They provide analysis for our products and making sure that, you know, our pricing is correct, and maybe we can be more efficient in how we put together our products, our models, and our services based on what the bottom dollar line says. We also know financial plans provide an investment for opportunities for funds for our businesses as well. How can we, however, go and ask for funds if we don't have an idea of what the funding model for our business is and what our needs are? And then lastly, the reason to have and spend time on a financial plan is that it is an essential part of business growth and development. It is a key piece of your business plan. So it is necessary. It is necessary to begin to delve into these financials. When we're looking at the financial plans, they do assist with several things. And Letitia, I'll go ahead and let you talk about some of these things that the financial plan further assists with.
Okay. Financial plans assist with the following. You see cash management. By paying attention to cash variations, you may be able to see, like, there are seasonal effects on your cash flow, or it could be environmental. As we found out with the COVID-19, there were some things that affected the goods that, you know, restaurants were able to provide and things like that. So they kind of had to switch their model for supplying food and items to the consumers. Business owners can also make decisions or renegotiate prices with suppliers or change their marketing approach. And I think that's kind of what we saw during the COVID-19 situation. Forecasting, this allows for businesses to look forward in how they want to make money. The forecasting provides a blueprint of how this will be done. Forecasting prevents business owners from being short-sighted and allows them to kind of focus on what their long-range goals and opportunities are. Forecasting is very important, I think, in this day and age. It's important to understand, okay, where do we go from here? If there is an event similar to what we've just gotten out of, how do we prepare for that? So forecasting is kind of like a preparation tool. Spotting trends, business owners can identify cause and effect relationships in decisions that they make. They can identify if their goal of spending more on advertising really impacted their revenue stream. And you'll be able to kind of see that as you put more money into marketing or trying to get your name recognition out there, or the product that you're trying to sell, or your service. I think right now what we're beginning to see with the BML movement is that companies are wanting to hold on to African American dollars, so therefore they're in support of the Black Lives Matter movement. And they're saying, okay, not only is it an ethical support, but it's also a financial support as well, because they want to maintain those good relationships, and that's very important. Prioritizing expenses. Now, this basically consists of evaluating your vendors, the people that you purchase goods from, and saying if the funds are there to pay those particular bills, what are my terms? Evaluating terms, negotiating better terms. It's all about managing or expanding your dollars, or making your dollars go as far as possible. If you have a vendor who has given you 30-day terms, but you know that they do not charge late fees or interest or things like that, maybe you're not paying it within that 30 days. Maybe you're paying it at 35 days and letting the cash float a little bit. And progress measurement. Measuring progress is vitally important as business actions of owners and employees translating to business growth. I mean, are they translating to business growth? And business owners evaluate financial statements and growth charts to identify if a business is progressing. This is a continual process through the life of the business. So you're constantly going to be evaluating your statements and measuring, okay, where were we a year ago and where we are today? And what factors have contributed to that growth, or what factors have contributed to that decline? Now, if it's a service industry, progress management can also be measured by soliciting surveys and just taking into account, okay, what worked for our customers and what didn't work, and what things do we want to kind of streamline, or what do we need to reassess and probably do away with. I know, I think Cynthia said that you'll be consulting with white teachers who work in urban areas. And so you might want to, if you're doing a progress measurement, then perhaps just taking a survey of the people that they actually come in contact with to say, okay, has this been beneficial to you? What areas do we need to improve? And just kind of graphing that information and correlating with that with how those funds were spent in outreach or things like that, just to make sure that you're making a difference and you're connecting with the people that you really want to serve. So that's what progress management would do for your business. And I know with the Cheesecake Factory, everybody loves, everybody loves cheesecake.
Cheesecake Company.
Yes, Cheesecake Company. So yes. And so with that, progress management would be where were we at a year ago? What things worked, what things didn't work, what was our best seller, what didn't sell as well. And you're looking at your lower performers. What was the cost in making that product? Was the cost beneficial to what the outcome or the income that was received, or revenue that you generated from that particular item? So it's just taking a step back and actually looking at where can we make money and what's making money and what's not. So it just gives you time to evaluate those things. And I think
that's very good. Before we go to the next slide, I'm going to take just a moment as well to also speak to when you're beginning to start up your company. Mm-hmm. And some of the basic questions, in my opinion, and Letitia, let me know if you agree with this too, is to really look at, okay, I have this idea, I have this product or service I want to put into the marketplace. First of all, if I'm going to make this jump, what do I need to make in order for it to be a profitable endeavor for my household? We know research shows that startup companies, they do tend to lose money in the first 3 years. And so what can we do in terms of metrics and milestones to be able to put into place when you know that you are charting in a path that will turn your business model profitable quicker, sooner rather than later? Another thing to consider as well is when you are lining up, and this is for all of us, when we're lining up our products and our services, being able to put a value and a price. There are two different concepts between value and price to what we are putting out in the marketplace. While the market might dictate our model, our business model, needs to be less than, for example, we're in Kansas. We're in Wichita, Kansas, compared to Kansas City, for example. Let me just go ahead and make a great and plain example. In the Kansas City, Kansas market, or in the Kansas City, Missouri market, pricing is just a little bit different because income is a little bit different. If you try to put forward some of the more pricier retail options, for example, in Wichita, they may not necessarily do as well because of the marketplace that we have. Or if they do, you're looking at a smaller audience segmentation or customer segmentation compared to a KC-Mo market. In Tennessee, when we go and visit my in-laws, I noticed that there are so many more shopping and retail outlets. The penetration and the density of strip malls out there is just, it's a lot. Noticeably a lot. Well, it's because their incomes are higher, so they have more discretionary income in order to spend. And so the density of our shopping here is different compared to there. So when we're looking at, again, our modeling, our pricing, our value, what we need to make, spending time to think about those types of needs for our household to make sure we're getting to be profitable in our particular marketplace, revenue generating, that's important. And then the last thing I'll say, going back to products and services, you have a company, but you may offer multiple services within that company. For example, our food entrepreneurs, yes, you have your products. You have your wonderful confections with the cheesecake, and you have the chocolate dipped strawberries, Nicole. But there may be an opportunity for you all to do some recipe generation. There may be some opportunities for you all to do even some consulting for some home-based cooks who want to be able to play up, you know, what they're doing in their own kitchen. That could be another stream of income. If it's worth the effort to be able to do that, then putting pricing around that as well. Those are one of the ways that businesses can continue to adapt. They can continue, as Letitia said, forecast, spot trends and what people and consumers' habits are in terms of consumption, and then also prioritizing, you know, if we're going to do this experiment, then where does it fall on our level of priority? If we're going to branch out and do a podcast to share our consulting information, is that really worth taking resources and time away from maybe our main revenue generator, and that is events and speaking engagements, things of that. And then measuring progress all the time. If you're going to put a product and service out there, you need to be able to measure its performance in terms of how it not only does for the consumer and how it promotes your company, but also what kind of revenue it's bringing in. Right. We'll go on to the next slide, and then we'll circle to one of the questions that we did receive. All right, Letitia.
I didn't mute myself. Okay, all right. So first steps in creating a financial plan. I think that, you know, what Stina Long had touched on is very important. I think if you're going to create a financial plan, and especially since we know that businesses tend to, it's a little rocky starting out. I think, and this isn't here, so this is coming straight from me, just, you know. But I think it's important that you have a budget, a family budget. Like, you know how much you need in order for your family to maintain, or if they have to cut back on different things, make sure you know what that number is. Okay, so you should know what your budget is, okay, so just know that, especially when you're starting out. I think it's important to have a family budget, but I did not put that there. So in financial planning, you're going to ask questions, you know, such as, you know, what are your short-term and long-term financial goals? Okay, what are you trying to accomplish? Is this going to be a family business where it just continues going and going and going? Long term, or is it just you're seeing a need right now, you're going to fill that need, and then your goal is to sell this off to, you know, another end user, or, you know, or if you're trying to franchise or things like that. So just know what your short and long-term goals are for the business. And are you comfortable with taking some risk? Now, in business, there is no reward without risk. Those two things go hand in hand. And if you're a person who likes to play things very safe, you're going to have to get out of your comfort zone just a little bit in order to, you know, stretch the business and to grow the business. Just know that there will be some risk involved. something might not work, and then you're going to have to, you know, evaluate that and like, okay, the numbers just aren't there. Okay, why didn't that work? Okay, let's backtrack. Let's go back to point A. Do you have an exit strategy? So if something isn't working and you know it's not working, you continue on this road, do you have a strategy to say, okay, it's time to jump off this boat? And some people don't like to focus on the end, but sometimes I think that you need to know what your end goal is, or what you're willing to say, okay, this just cannot continue like this. We need to seriously evaluate some things. What are some of your investment strategies? Are you looking to invest some of your income in CDs, money market accounts, things of that nature? Excuse me, I'm drying up here. But you should know, as far as like you don't want to just spend everything that you make. You need to be putting some of those profits aside and growing those funds. What is your team ethical? Is your team ethical in its approach to business and finance? That's very important, especially in accounting. A couple of years ago, and you heard about Enron, and people cooking the books. That's like a real thing. That can definitely happen. If you are a person who all you want to see is positive numbers, and that's the mindset that your accountants have, they might feel pressure to doctor things. You want realistic. Be realistic in your business, and realistic in your approach to create revenue. Okay, so you need to make sure that you're surrounded yourself with people who are not afraid to say no, or say this isn't working. You need to know who's on your team and the ethics that those people have. Okay, it's important to have people on your team who will shoot straight with you and say, hey, we just missed the mark, and it's because of these things. And I think that actually makes you a better leader in business, because it challenges you to think creatively and approach situations that are coming on, or things like that. So are you willing to seek new vendor relationships if there are potentials for large profits? Okay, a lot of times people want to do business with people that they know. I grew up with this person, they're good people, things like that, but they're not giving you the best price for the product. If there's a way for you to generate more revenue, but you have to, break that relationship, is that something that you're willing to do? So when people say it's not personal, it's business, that is a true statement. Sometimes if you're looking at your business, your primary responsibility as a business owner is to make money for that business. You want to make sure that you maintain and you foster good relationships, but if something's not working with a particular vendor, you cannot be afraid to explore and see what else is out there. So
that's great. So good overview statements, and now we're going to get into the nitty-gritty of what these reports do, how they function, and how you can begin to compile them.
I'm going to grab some water. I'll be right back.
Okay, so while she's doing that, I'll go ahead and take us through one of the most important reports or financial documents that businesses can have, or your income statement. They do provide information about whether your company made money over a given span of time, be that span of time be a month, a quarter, or a year. It quickly summarizes your revenue minus expenses, and that indicates your profit.
Yeah. Okay. So the income statement, this is actually a statement that is used to provide information on, like your company, as far as, what money or revenues have you brought in, what expenses went out, and what your net profit is. Now, in this example, the income statement, it shows zero. And the reason why is this is a very new company. Okay. And if you're able to read this example here, it says January 2nd, Matt invested $2,000 personal money into a sole proprietorship, Good Deal Company on January 20th. Good Deal buys 14 graphing calculators at $50 per calculator, which is 50% of the selling price Matt had observed in retail stores. The total cost to Good Deal was, for all 14 calculators, was $700. Now, the reason why nothing is shown up here is because nothing's actually happened for Matt. He hasn't sold the calculators. He hasn't incurred any expenses from the sale of the calculators. So that's the reason why it's 0, 0, and 0. But this statement, had there been numbers in here, which would actually show you what your net income is. That's actually the money that you made that particular month. Okay. And I know banks like to see your income statement. They also like to see the balance sheet statement as well. So, but that's a very important financial statement to have, the income statement and the balance sheet. And I don't think the balance sheet probably comes later, but
it does.
Okay. Let's see. And the profit and loss analysis is also known as the income statement. So when people say, I want to see your P&L, your profit and loss, they want to see what you brought in, what went out, and what your net income is. And that's typically what the profit and loss statement shows, but it's also an income statement as well.
Ready?
Okay. And the balance sheet, the reason why it's titled a balance sheet, because everything should balance. The accounting equation is assets is equal to liabilities plus owner's equity. So the $2,000 that Matt invested in his company, you're going to see that on the balance sheet. And you're going to see that as the $1,300 cash that he made after purchasing $700 worth of inventory. And that brings us back to $2,000 that he actually invested in his company. And the capital investment, that's the $2,000. So if this is out of whack, something didn't get recorded. And you should kind of question that. Yeah.
So I have a question for you real quickly. And that is, sure. Okay. And that is, at what point in people's journeys, their business development journeys, should they start to go ahead and log some of this financial information in this format? So for example, if you're on the startup side and you are still incurring costs and you're purchasing things for your business, is that the point? Or do you start putting in your business expenses in these reports once you've actually launched?
I would say it's probably best to start doing it at the beginning, just because you're going to want to know what your true income is from the business. And you're not going to know that if it's just floating around here in the air. You know, you got receipts over here, you know you bought this, but somebody paid you this, and then it's not where you can actually see it, where it's tangible. So one thing I suggest is, if you're not familiar with or you're not experienced with Excel spreadsheets and things like that, there are some templates that you can download, and then you'll just type in, you know, what you purchased, your receipts, and it can capture that information for you. And if you're interested in that, I can send some your way. But another thing, a source that people use is like QuickBooks, because it's very user-friendly. But again, garbage in, garbage out. So if you're putting things in there and you don't know if it's an expense or if it's a capitalized asset, you're just throwing everything in and it's not going to the proper accounts, then it'll distort your numbers. So I think it's very important to have either a bookkeeper, talk about CPAs, just review those things. You can run a trial balance out of QuickBooks, and the trial balance is going to look similar to the balance sheet statement, but what it does is it just gives you the raw information, and it'll say, okay, you know, you have all these expenses, you have all this revenue, and if those numbers do not tie, then that'll cause you to go back and reevaluate, okay, where did we post this information? So, I guess that's what I would say is something that should probably happen at the beginning, so that way you're familiar with it as it goes on. It doesn't get too out of hand, but it's not unfixable. Because I mean, somebody can look at that and say, okay, this is a beautiful mess. I'd love to fix it. I'd like to go ahead and clean this thing up.
That's true. That's
and
true.
sometimes that's me. Okay, I love puzzles. So
I bet you do. And speaking of puzzles, we did have a question from Mark. So if he's looking at his balance sheet and his financial reports and wants to make a decision about how much money to allocate to marketing, for example, what are some recommendations you would give to a business owner and how to look at their numbers and analyze when it's a good time to allocate a certain percentage of their finances to a function such as marketing?
Okay. So I basically, the formula that I would use in regards to that is for every dollar that is spent on marketing, you should be generating at least $2 or $3 in revenue. So I guess that kind of comes in the forecasting also, because you don't know how much you're going to get back until you actually put the money out there. But I would at least say 10 to 15% should be directed towards marketing. And some of those marketing outlets, you know, you have your Facebook, you have, you know, various social media, but you also have, there's the word of mouth, you know, and are you engaging with your customers? Do they feel as though, you know, each experience with, you know, at the Cheesecake Company is, you know, do they feel like that's a genuine experience? And so for every, you know, positive customer interaction, that in itself, it's like free marketing. And one person will tell one person, you know, next thing you know, 6 people are coming there. So, so I would definitely, you know, I would say about, you know, starting out, I'd say at least 10 to 15% should be invested in marketing, you know, but you can just kind of evaluate that and say, okay, you know, is this marketing approach bringing in the desired revenue stream for us?
Great. We'll have you continue on with the cash flow statement now.
Okay. Cash flow statement is actually a statement that many business leaders like to look at. And essentially it just says, it just gives you like a real kind of like snapshot of our income. You know, this is the inventory, this is what we spent, this is what we made on this particular day. Now the cash flow statement can change depending on the date that this actually happens. So like with a income statement, you can capture accounts receivables in the income statement, but in the cash flow statement is actual cash that you have on hand. And I think that's kind of what people need to understand. So if you've invoiced somebody for $2,000 on January 1st and it's January 30th and you've done the cash flow statement, it doesn't show, is because that money hasn't came in yet. So it might come in on the 31st, but it could come in on, you know, February 1st. So just know that when you're looking at the cash flow statement, it's just a capture of what cash you have on hand, actual cash, not money on its way. That's what this cash flow statement, that's what it does for a business. So just a quick glance there.
Wonderful. And then you did mention that based on the type of structure of your business, if you're a for-profit or a nonprofit, you might have some different financial documents. And here you included for nonprofits a document which is very important, and that is the statement of activities. Since we don't have any nonprofits on, we're going to just show that, and we're going to continue to move on in our conversation here. So when it comes to who can actually help make sense of all of these documents and all of these things, then there's definitely some help that's on the way. What I appreciate about your presentation, Letitia, is that it was not filled with jargon. You were really able to clearly, in regular people's language, communicate what the purpose of these financial reports are and how we go about beginning to compile them. But can you talk about the difference between a CPA and an accountant?
Okay. Accountants can prepare the financial statements, while CPAs, they prepare financial statements, but they also can represent you as far as like regarding taxes and things like that. And CPAs are also certified by the state of Kansas. Sorry, I did not put that there. But typically what people do is, or businesses do, they'll have a CPA on retainer, kind of like you would have a lawyer on retainer. And every month, or about every month, you would have a CPA kind of review your books and say, okay, you might need to move this, you need to make this adjustment. But their primary responsibility is to make sure that your business is responsible as far as like taxes and things go, so they want to make sure that, you're running a business efficiently, and you are actually designated as the right tax entity. So either that's a C Corp, S Corp, sole proprietorship, LLC, things of that nature. They just want to make sure that starting out and proceeding forward, that you're representing yourself correctly financially. So
that's very good information. We're going to pause the presentation at this point and open it up to you all for questions, comments. I know that there was a couple of other statements or questions that came through on the chat, so we'll just open it up to you all now.
Okay. I think Mark has said, is there an ideal amount? Okay, which we already addressed that. What information would be necessary to determine value, since it can be different for each customer? Okay, all right. Are you talking about the value of a particular item, or?
No, Christina talked about value. So in a business, if you're looking at value that you provide, how would you determine it? What information would you use from an accounting standpoint that a business owner might use to determine the value of his product?
Okay. One would be the profit margin on a particular item. So I know in manufacturing, and I imagine manufacturing is similar to the restaurant or food industry. You would take a product, you add all the items needed to make this particular product, and you determine, okay, if in order for me to make 10 widgets, I have to have 2 of each of these things and the price of each of those items, and then you just divide that by the total cost of those products or those items by themselves. It's probably better if I put it in a spreadsheet, because it's in my head. Okay.
The point I was trying to make is Christina talked about the difference between price and value.
Mm-hmm. Mm-hmm.
So customers see price, other customers see value in what it is that you produce. So my question was, how would you as a business owner determine value, what value you're bringing to a particular customer, when some will base it on price, some will base it on, what it does for them? I mean, in the end, a customer buys something because it satisfies something for that customer. Mm-hmm. So that's the value piece of it. I understand that as far as price is concerned, it's going to be the cost of something minus the raw materials that you use to make it.
Correct.
Right. So I'll speak to that in regards to looking at your different clientele, your different client base, for example, and your different revenue streams. For a designer, when I first got into design, yes, we can take exactly what you all talked about, the cost that it takes to be able to create this something or another for another company. But I noticed that there's such a difference, for example, between what a starting designer would charge for a logo design versus what an experienced one was. And in talking with the market, looking at the market, and then having conversations, when we're designing something for a customer, we don't just give them the artwork. That artwork carries value. That carries an extension of brand. It carries an extension of the opportunity for them to perform well. So all of those value additions get loaded onto the delivery of the logo, and that impacts some pricing as well. And your model, because you are dealing with a broad variety of customers, when you are pricing a slice of cheesecake that you guys would typically make, that could be different than what you place on a custom, because that customization takes more time, more thought, more energy. It creates a different level of value besides me just being able to come into your store and pick up a slice that you've already created. That's an example between, again, pricing and value. Additionally, you are putting forward a brand that's about gourmet, decadence. That's different than someone being able to pick up a slice from Walmart or Dillon's. There's a different type of value. There's a different type of price point as well because of the quality of your particular product. So again, when we're talking about getting into business and growing our businesses, sometimes we're really tempted to just compete on price. But if you compete on price, understand that it's a race to the bottom because there's always someone who can underbid you. When we're talking about consulting as well, there's a consultant on this call, and there's some who will be tuning in too when we release it online. We look at, okay, well, what does the market dictate is the range for your consulting services? You look and make sure that your range is falling within it, but then really think about, again, the value all the time, the preparation, the taxes that you have to include and pay as well as a business owner. All of that gets loaded into your pricing to create that value. But you don't just price just because you want to be the lowest competitor. If you do, I mean, some people choose that strategy, and again, you can always be underbid. And in that business model, it becomes a volume play. If you have so many smaller dollar accounts, then it's going to require you to make up and cover more ground to be able to get the revenue features that you want, as compared to if you really price with all the value, all the expenses of being a business owner in mind, then maybe you don't have to do a volume play as well. So that would be my answer to that.
And then also, I know there are, I guess, some people just they place value in the name of the product. You know, so if it's Gucci, they're buying Gucci because it's Gucci. They're buying the name, you know. And so without actually knowing the actual quality, it could be a knockoff. So it's just, you know, one of those things. Sometimes it's just the name. I know with Wichita Cheesecake Company, I mean, when I worked downtown, that was like the place. That's the place to go. And, you know, I know during the lunch hour, it was like, you know, standing room only. Sorry, it's busy, you know. So I guess it just kind of depends on, you know, what's in the name, the value. Like she said, like Christina said, that, you know, people, yeah, you can get a cheesecake from Walmart, but it's not fresh. It's not the same as a freshly prepared cheesecake. There's no comparison. So, and I think marketing is, you know, I think that would be a large piece of, you know, what's really going to drive that. So
that's great. Great question. Great responses. Anyone else have a question that you'd like to pop on and share with us? And no pressure if you want to think about it, or like I said, be able to submit it more privately. That would be fine as well. Okay. So where can you go to get some further assistance on this? Letitia has been great, like I said, to be able to be willing to answer questions. And so we'll compile those. But then also the Kansas Small Business Development Center, they do offer free business consulting, and they also can assist in organizing people's financials as well. And that service is free. And so we're always looking at ways that we can share partners who have low cost or no cost services, and KSBDC is definitely one of those. Their link is included. Create Campaign, we can connect you with wonderful professionals such as Letitia and others. But in terms of financial preparation and development, the best resource for help for you, other than actually hiring a CPA or an accountant or a bookkeeper, just to get your feet wet in financial preparation, and that would be KSBDC. Letitia, any final comments from you?
No, I don't think I have any of, you know, if you want to reach out to me, that's fine. But yeah, this has been a great opportunity, and it's been a pleasure to meet you all.
Yes, you did a fantastic job. Can we just kind of air clap for Letitia? This is one of her first presentations, and I think she knocked it out of the park. In your follow-up email, we will be sharing, again, a feedback form. We do want to make sure that you all receive the information, and if there's ways that we can tweak how we deliver it, please make sure to give us that honest feedback. Your feedback helps to build our programming even better and more strongly, so we appreciate that. Tomorrow we have on deck how to hire help for your company. So even if you are considering, what does it look like to bring on more folks, or knowing you might not have the money to do so, but what does that process look like? Are there other ways to be able to get help into your company? Then we have Paris Lipsey-Coley from the Lipsey Consulting Group. I had to remember which one went with which. So Lipsey Consulting, she'll be joining us tomorrow. Be on the lookout for your follow-up email. And otherwise, thank you all for joining us today. We do hope that this was beneficial to you. We will now officially conclude.
All right.
Bye.